Welcome back to LukeTheTrader. Today we have Jeff Kendrick here from Cematrix. And could you please introduce yourself?
Hi, Lucas, and thanks for having me on your network today. My name is Jeff Kendrick, and I'm the president and founder, one of the founders of Cematrix Corporation. Cematrix Corporation is in the business of manufacturing, selling cellular concrete into the large infrastructure construction market across North America.
And since you already started to introduce yourself a bit, my first question right off the bat would just be, why should any investors looking from the outside be interested in Cematrix? What just makes you special in this case?
Well, we may be in the microcap space, but we are a company that's growing dramatically and is quite undervalued at this time. I don't know if you saw the latest results, but for last year, our sales grew by 86%. We're profitable now. We're generating cash flow, and we expect this to continue for the foreseeable future. So essentially, we're currently continue to be undervalued like most microcap stocks are. And so Cematrix is not only a solid short-term investment, but a better long-term investment as well.
Mm-hmm. As some investors are also very interested in sort of the seasonality of your earnings. Is there sort of a way to potentially flatten out your seasonality or perhaps make earnings in the future more stable, so to speak?
There certainly is, as we expand regionally into the southern U.S. We already do projects down there, but we don't have actual locations that we can work from, but we will be changing that in the near future. But the seasonality actually benefits Cematrix because during the off season, which is really the first quarter of the calendar year, we actually break down all of our equipment and rebuild it. So it is not only ready for the fall of the construction season, it is also good for our employees because we're able to retain all of our key employees over that period. And in addition to that, they become more mechanically inclined and can service our units on site if there's any issues during the construction season.
Is seasonality sort of the reason why you're not providing any guidance thus far, or are perhaps any other factors? Maybe there's
not at all. It's a good question. It really boils down to the fact that we are we essentially don't provide guidance because it's early market stage, and because it's early market stage, it's somewhat volatile. To give you an example of that is that last year we actually budgeted $42.5 million, and that was strong growth from the previous $29 million. 2 months into the year, we found that $10 million of our forecast got delayed until 2024. So not only did we replace that entire $10 million and sell another $11 million and place it, you can see the volatility in the market. As it continues to grow and becomes more of a commodity, which is going to take a number of years yet, then it'll be easier for us to give guidance. But what we can give guidance on is that we will continue to grow our sales. Last year grew by 86%. The previous year was 36%. So again, it's going to grow, but trying to measure that and where it's going to be on an annual basis is very difficult. So we basically tell our investors that we expect to average better than 30% growth over the next 5 years.
Mm-hmm. And because your product is sort of very different from all the competitors, can you sort of explain why your product is an advantage over the competitors, since you didn't really have time to elaborate on it in the webinar?
Yeah, and that's another good question. And we do on our normal, hourly presentations or one-on-one to other investors. But when we're replacing the legacy products, when we're talking about replacing styrofoam or rigid installations or other lightweight fills, we have numerous benefits over those legacy products, not the least of which is lower in costs or lower installed costs. Also much faster construction because we can pour 250 cubic meters an hour with some of our equipment. And we can, of course, place that much faster than somebody can put down a piece of styrofoam and cut it around various things that they have to place it. And And because of that, and we're also generally more environmentally friendly than the products we replace to as well. When we talk about other competitive cellular concrete companies, we don't have any in Canada, but there are, a few larger ones in the U.S. that compete with us on some of the larger projects. We have technology that they don't have, okay, that enables us to produce a material that's lighter and stronger than most of our competition, and lighter and stronger in an engineering field is very good, because that's what we're trying to accomplish. So this also enables us to engineer sale a better engineered solution for a particular application, meaning we can provide our customers with a solutions that better than what was basically specified during the bidding process.
And since you sort of also mentioned the space and the competitors, and in the webinar you talked about potential M&A, so mergers and acquisitions, is it something you want to pursue rather in the far future, or is it something you just evaluate when you go through each milestone?
Well, 2 years ago was part of our initial strategic plan right away, but because the market, microcap market in Canada became so bad and our share price went down to below 20 cents, we changed our strategic plan for 2003 and 2004 to just focus on growing the market and executing our backlog, making money, and hopefully by the time that 2024 ended, the capital markets would have turned around. We see some promise there, and if that happens, that we will probably get back into the acquisition game in 2025 and beyond.
And there's sort of one thing some investors are rather interested about, and that is how you're planning to attract new investors. Is it just the usual performance, or are you trying to get the story out more to investors?
Yeah, it is, of course, the results that's going to be the key thing, because especially in this tough market, most investors are looking for companies that actually have real sales and they have real profits and cash flow and the opportunity to grow more, right? And that's what Cematrix is. We've essentially de-risked our company completely. There's actually no risk that we face anymore except for managing the continued growth of the business. So how we will get out to investors is basically, the webcasts that we do on a quarterly basis, plus we add another 2 webcasts during the year, so we keep our investors informed. And part of that, we try to educate our investors about what we do. So we try to take time to do that too as well. We also have a digital marketing campaign going on in the background. So on Bloomberg and other financial medias, we're doing digital marketing. We also do a number of one-on-ones on a regular basis, particularly after earnings calls. A lot of although we don't have a lot of institution investment yet, because we're kind of early stage for them. Yeah, we have a lot of institutional investors that are actually following us. So we keep them up to date on a regular basis, usually quarterly and sometimes more than that. Then we will also do the odd investor conference, but investor conferences have not been, entirely successful for us in the past.
As you already mentioned, sort of the risks that your company might face, are there any sort of at the current time that are worth mentioning, such as scaling and whatnot?
Not really. What we mentioned during our last webcast is that one of the reasons for our success is that we were completely prepared for the growth in the business, meaning we built excess equipment or acquired excess equipment in the past. So we had over $200 million US of seasonally adjusted sales capacity, meaning without adding another shift, so just one shift part of the year, 6 days a week, we could produce over 200 million US in sales with our equipment. So again, lots of growth within our equipment. In addition, we have a significantly trained and cross-trained staff that we retained during COVID. We didn't let anybody go. That meant we lost more during the COVID period, but we were ready to grow when this thing took off, which it did in the past 2 years, and we expect it to continue. So to give you an example, we only hired 2 part-time laborers to grow our sales from 29 to 53 million last year. And we still have capacity within the staff that we have. It's not that we won't add more, but that's what we added last year in order to grow from 29 million to 53 million in sales.
Since you have this sort of, let's say, big capacity, are you sort of planning to hire more sales staff or any other personnel to sort of increase the backlog, or since you're essentially able to churn it better than before? So speaking of the backlog.
Absolutely, Lucas, particularly the sales side, because the market is growing so fast, we can't keep up with the bids that are coming out every day. So we want to continue to do that and meet that demand, but we also want to methodically grow the market as well. So not only the public market, but the private markets as well. We're pretty solid on the administrative side, so we don't really have to add any more capacity there. But of course, we've just added a new CFO because I promoted our COO, or our past CFO, to COO on January 1, and that's basically to help manage this continued growth. It's become it's growing so significantly. We had to do that. We don't expect to add a whole lot more there, but what we will add is more operational staff as well as we sell more. We may have only required 2 additional laborers last year, but this year, with the continued growth, we'll be adding more key people on the operations side as well.
And with so much happening around you, what are you looking forward to the most the next few weeks or months, perhaps? Any goals in mind?
Just our continued success. We've got a huge backlog. We're landing more and more projects every day. So we're looking for another, profitable, cash-generating 2024 that even exceeds what we've done in 2023. And by doing that, we again hope that our stock price turns around. So one of the things we're hoping is, again, that microcap market will turn around. And that's one of the things we're looking for before we start getting back into that acquisition market. What's important to note is that even without acquisitions, if we grow by 30% per year, not only are we going to be 100 million in sales in a few years, but our margins go up and our EBITDA as a percentage of sales go up, so that should get up to the 15 to 20% of sales eventually on the EBITDA and sales side. And so that's one of the things we're looking forward to as we continue to grow this business.
So even the current margins are not where they could be, essentially?
No. They were somewhat affected by the cement crisis in 2022. So there were some lingering effects last year of that. And also some of the projects that we purchased on the 2 U.S. acquisitions had some lower than what we would expect normal margins on them. So we've been working them through the system, and by the end of 2024, they should be gone. So we should be averaging gross margins minimum of 25% and probably closer to 30%.
And since you're sort of leading this new sort of product into the market, what are the customers thinking about it? What is sort of the reception? Because it is really going good in terms of revenue for you, and I just want to gauge what sort of the reception is around that.
It's been incredible. So there's really 2 distinct markets here. The U.S. market is about 15 years ahead of the Canadian market. So, and there are some competitors in the U.S., and because of that, they help grow the market. So that market has been taking off significantly. Ours in Western Canada, where we started, has started to take off a bit, but it's still early stage. And in Eastern Canada, we're just starting to break through and getting some projects down there. So there's still a lot of growth within the Canadian market, but the acceptance of the product has been significant. And again, we're now talking that the product has been in the ground for 20, 30, 40 years. So it has done its job and it hasn't broken down. So that's why, ministries of transportation, departments of transportation, and engineers are now specifying the product more and more.
And as you're sort of coming at the end of our interview, are there any sort of last mentions or anything that is in your mind that you just want to bring out to investors?
Just keep an eye on us for investors. They may not be ready to invest now, but or if you are a shareholder, you're going to certainly be, I'm sure you're pleased with the 2023 results. I think you'll be pleased as each year goes by now as we continue to grow. As this market has really matured a bit, and we expect that this growth will continue. We're, again, going to continue to grow this organically, but we expect that to get into the acquisition space again next year. And then finally, I just wanted to thank you, Lucas, for having us on here today. We appreciate the opportunity to speak to you and to speak to your investors, and we wish you all the best in the upcoming year as well.
Thank you too, and it was great talking to you.